Everyone, thanks for jumping back into the cryptoverse. We are going to be talking about Nano again today. I'm going to kind of do an experimental type video, so it could be a complete disaster, and if it is, I apologize. But I'm just going to try to incorporate a little bit of calculus into this analysis. So if you guys, remember back to high school or whenever you learned calculus, you might remember derivatives. So it's going to be pretty basic calculus. We're not going to go into anything super complicated, but just as a kind of a probe into, how people react to this kind of analysis, I just wanted to jump in and kind of get your guys' thoughts on it. So please let me know what you guys think about this stuff. If you like me going into these kind of alternative routes of analysis, or if you would just prefer me to stick to more traditional methods. So what we're going to be talking about today are moving averages primarily, and we're going to be talking about the derivatives of them. So the blue line here is the price of Nano since inception on a logarithmic scale, and then the orange line is the 50-day moving average. And I like these because you can take derivatives of moving averages and they can actually seem somewhat reasonable because the curve is pretty continuous. It's not like these, it's smooth, I should say. It's very smooth. And these, when you have a regular price curve, it's not a very smooth function. So a derivative of it is just going to be all over the place. But if you take the derivative of a moving average, it looks much better. This can help us gauge longer term momentum swings. It's just what I've always talked about. We don't care about day-to-day price action if it's going up or down, whatever, however many cents or whatever. It's it's pretty short-sighted in terms of the longer term picture here. So if we just move on to say, sorry, this is not scrolling. Okay, so here we're going to take the moving average of the 50-day. We're going to take the derivative of the 50-day moving average. So it looks kind of weird, so just bear with me for a second. So what it means, though, what does the derivative of the 50-day moving average with respect to time mean? When it's above zero, then that means the 50-day moving average is increasing, as simply put as it can be. If it's below zero, then the moving average is decreasing. So they don't, it doesn't react instantaneously to price. So price could be going down, but the moving average, the 50-day moving average, could still be increasing because it's taking into account, say, the other 49 days. And if obviously if those are high enough, then one day of a price decreasing is not going to make the 50-day moving average immediately start decreasing. It's kind of a lagging indicator in a sense. But what you can tell is, compared to what was going on at the peak here, and this corresponded to that 38 whatever dollars we hit back in January of 2018. You can see that it's hard to really see what's going on since then. So just so I quickly show you, so I know this says price here, but this is really corresponding to this 50-day moving average. So think of the price as the 50-day moving average. You can see that the derivative, which is this blue line, and compared to the last figure, we went from negative 0.6 to 0.8. Here we're going to just negative 0.1 to 0.1, so we've zoomed in. So we don't care about what's going on back in January of 2018 because it kind of distorts the rest of the data. So you can see, though, that as the 50-day moving average, when it's above, when the 50-day moving average is, say, above zero, when it's increasing, then the derivative of it is above zero. So here you can see it starts to go up, and that's when it crosses zero and it starts to go up. When it starts to go down, right here, that's when the 50-day, the derivative is below zero. So remember, when it's below zero, the 50-day moving average is decreasing. And you can see here that we were decreasing for quite a while, as many of you guys experienced and lived through, and that's why most of the derivative is below zero, is because it was a pretty much consistent downward move. Okay, so you can see as recently, though, when the 50-day moving average started increasing, then the derivative, you can see, went above zero. And so what we're interested in are these longer term momentum shifts where we really start to break that zero barrier threshold. So we're going from a negative slope to flattening and then going up back up. And we're about to cross that threshold. So, who really cares, right? I mean, at the end of the day, it's just some obnoxious way to look at price. But let's see. So if we were to just plot the price against this derivative, you can kind of see how they correlate to some sense. As this goes down, then as the price goes down, then that derivative is just going to be below zero. And as the price goes up, then as it goes up here, then that derivative gets above zero. But the real thing is, what can we take from the past, right? I mean, this is all good if you have any idea what it means, but what can we look at in the past and kind of take some lessons from that? So let's look at Bitcoin. So this is what it looks like for Bitcoin. This is the derivative of the 50-day moving average with respect to time and days since inception. So you can see over here, you can't even see anything because it's dwarfed by this peak. And this peak was the 2013 peak. So you can't even see what was going on compared to that peak. And this peak is dwarfed by the 2017 peak in Bitcoin. And then this is the most recent peak in Bitcoin, where it went from like 3,100 up to around 14 grand. So since in the previous videos I've kind of compared Nano to the $38 potentially being similar to Bitcoin at this peak, and then we're currently in this range, hopefully before hitting this range. Let's dive back into Bitcoin. So what we're going to do is we're going to zoom in to this region. So days since inception between 1500 and 2500. Okay, so 1500 to 2500, it just corresponds to between this line and this line. So if you remember, Bitcoin, you can look at the previous videos if you haven't seen them before, but if you remember back in 2015, Bitcoin had a golden cross, a death cross, and another golden cross. And it was that second golden cross, which is when Bitcoin started its long-term bull market, where the 20-week moving average was held as support for around 2 years. But what happened to this moving average, the derivative of the moving average, with respect to time during that time? So you can see the first time we had that golden cross, obviously that derivative went above zero on the moving average, and then we went below, had the death cross, and then we went above it. But the interesting thing is, and you guys will experience this throughout the next bull run, there will be price increases and there will be price decreases. And, I don't need to get comments when the price decreases 5% after I make a video. That's not the point of the videos. The point is to look at the longer term price movements, not day-to-day stuff. So what you can see, and even with Bitcoin, you can see it, we spent time above zero, which means that moving average is increasing, which means the price is generally increasing. We also spent time below zero, which means the price was decreasing. So what does that mean, though? If you look at this graph, though, as we continued on after the second golden cross, the amount of time that the moving average was increasing far outweighed the time when it was below zero and when it was decreasing. And you can see that the peaks above each time we had kind of this run up, and then we kind of had a correction. And then the next time the run up was bigger, and that's reflected in that moving average. It was bigger and it went above the previous one, and it goes all the way back. And then we went down, we had a correction. And a lot of times, if you guys go back and look, a lot of the corrections that Bitcoin had were around 30%. I think it's safe to say that Nano might see something similar. They might even be more pronounced. They might be 40%, 50% corrections on its way up. But the point is that what we're looking at are these longer term moves. So are we going to continue to see these tests where after every time, the peaks get higher and higher? The funny thing is despite the fact that these peaks get higher and higher, it's nothing compared to what came after. You see this goes up to the derivative goes up to 30 to 35. I mean, this means that the price exploded, essentially, from where Bitcoin had previously been for an entire 2 years, basically, what it was doing. And the crazy thing about that, though, is that that's nothing compared to what it went on to do for the next several months. You can see that first peak here after all this playing in the sandbox basically during this time period, which is on this figure here. If you look back here, this first peak, that is the peak. This is where we went to 20 grand a Bitcoin almost, okay? And here, we're not even, this the derivative at, say, 30 is an order of magnitude less almost from where that moving average differential ends up going. So, if you're aching over pennies now, you're just gonna have to prepare yourself for potentially seeing, Nano could go to $5 and then it could correct back to $2, or it could go up to $10 and then correct back to $5. These, I think these things are pretty standard. That's why I think one of the things you'll often hear is that it's actually sometimes easier to hold in a bear market than it is a bull market. Because in a bull market, you'll see you can see your stack, your value increase a lot. And then when you start to see a decrease, you just get spooked and you sell it. But in a bear market, you just kind of keep holding on for dear life, because at some point you don't want to sell, because then you're kind of, you are capitulating and you're saying, okay, I give up on my position. And it's hard. It can be hard for anyone to come to terms with something like that. But if you look at what Bitcoin was doing, what we're going to be looking for Nano with this differential with respect to the moving average is to see these peaks get higher and higher. And over the coming months, if we can see that, then I think it's going to provide further evidence that we're moving in the correct direction. And we're going to be looking to see if we can spend more time above zero than below zero, so that our price will steadily increase. If 2014 emulated 2018 and 2015 more or less emulated 2019, there are some differences with Bitcoin. Well, if 2016 were to emulate 2020, then it should be a pretty decent year coming up. Obviously, there's no way to say for sure. There's some evidence that it could be a longer cycle. But regardless, the Bitcoin halving is coming next summer, and historically, after the halving is when things really seem to pick up. So, with that said, let's compare them. Or sorry, that'll be on the next figure. So here is Bitcoin's golden cross, death cross, golden cross, and you can see it on this differential figure. If we go to the next figure, you can see Nano, golden cross, death cross. I think we're going to be having that golden cross soon, which on this is here. And, there was still a lot of fun to come in the price before we even reach that mania phase. So just kind of to put things in perspective, where we could be if we continue to emulate what Bitcoin did in 2015. So if we compare them, you can see, you can just putting them next to each other. And the reason the y-axes are so different is just because of the price difference. The price difference for Bitcoin, yes, I could have normalized it so that they were identically comparable, but I think you guys can understand that this is just, it's because the price of Bitcoin was so much higher, that this is so much different. But really, just look at the qualitative comparison here, that we have this golden cross and then the death cross, where I think we're going to be printing another golden cross soon. Obviously, if Bitcoin decides to reject hard off the 20-week moving average and go back down to 5 or 6 grand, then clearly we're going to be waiting a little bit longer. But if it doesn't, if it stays, more or less where it is, then I think, I think we might run up, and I think this next run up, as I've mentioned previously, is going to be significantly higher than the last run up. The last run up for Bitcoin, or the one back in 2015, was dwarfed by that second run up in this differential. With Nano, this corresponded to a price of around $2. If it does what Bitcoin did, where we see this continued increase, then I think it's going to go up to maybe between $3 to $5 on this first run up, and then maybe see a correction. Clearly, this is just speculation. So, briefly, I just want to jump back into something I've gone over several times is what Nano is doing. So we first started covering Nano. I don't remember exactly when it was, but it was sometime back over here, I think. So we talked about the golden cross. I remember when we were over here, I said I thought, we were going to have a death cross because, if it did what Bitcoin was doing, and now I've been saying it's going to be followed by another golden cross, and it seems like we're heading in that direction. You can see that this moving average is already moving in the positive direction because it's just following the price. So we're going to basically start to see something like that, which means that we might be seeing a crossover if we just kind of extend that. I'm going to extend this down. Obviously this isn't perfect. I don't know exactly what it's going to be, but that would put us in mid-December, which I think I mentioned before. But if we look, I haven't looked at this actually. Let's see what the price, so we're on the daily, so let's see where the 100 comes in. Okay, so we passed the 100 on the daily, so clearly that's not what we're looking at. Let's look at the 3-day and see if it's anything interesting. Okay, so there it is. So it looks like we are right at we're at the 50 on the 3-day. We kind of went right up to that. And we're trying to break that that region. So we'll keep an eye. I don't know if we're going to break it right now or not. I think there's a good chance because as long as Bitcoin doesn't do something absolutely catastrophic, I think alts are showing a decent amount of strength right now. So it looks like we are holding resistance right now it looks like it went straight up. Yeah, it looks like it went straight up to that line. Look at this. By the way, I typically ignore wicks. Just look at the body of the candle. It went straight up to the 50 on the 3-day. Straight up to it. So we will continue to watch that and see if we can get above that and continue moving up. And then let's look at the weekly chart just to see if anything is worth mentioning. Okay, so then obviously the next point to break would be around about 12 after we can pass that 3-day resistance that we're holding at the moment. One thing I kind of wanted to show you guys is just this RSI because I think it can help put things in perspective as well. So if you were to just draw a line across. Oh. Okay. Okay, so if we just draw this line, you can see that we more or less held this region as support. So it's around 50, more or less. Let's see if I can line this up. So it's around an RSI of 50. We held as support during a strong bull market, and it's the same level that we more or less hold as resistance during a bear market. Now, when an asset is at 30 or less, it's considered oversold. And you can see that we hit 34 on the weekly. When it's 70 or more, it's considered overbought. So, when we hit 70 here, actually it pretty much immediately corrected. We went from 16 cents down to 6.669 cents. It's kind of crazy when you guys just, when you jump back a couple years and we're talking about 6 cents. And now we are at, over $1. Most assets wouldn't dream of seeing an increase like that in a couple of years. But the cryptocurrency market is a speculative bubble. It's just a speculative asset class. So, you have these increases, these speculative bubbles, and decreases. That's why it's better to measure a coin's success based on yearly lows rather than yearly highs, because they tell a completely different story. The number one rule that I've learned in this market: don't measure a coin's success based on dumb money coming in. So, if we just take like a measured move here, this is one thing I know we don't really like to look at, but if we just take a measured move to where we currently are, Nano is negative 97% from the peak. Okay? It's ridiculous to compare it to something like this. This money that came in here is dumb money, pure and simple. You don't measure an asset based on a mania phase. If you were to measure it from when it was incepted and measure it to where we currently are, It's up 12,271%. At the peak, at the very top of the wick, well, let's just go here because I don't really like to measure wicks. It was up 356,000%. You know, it all depends on your reference. Okay, you don't measure an asset's success based on the peak of a bull market. It's dumb money coming in. This is when your grandmother was buying. This is when, you know, a coworker who is computer illiterate was buying. It's just silly to do that. So don't look at those things to measure an asset success. All right, so I think that more or less covers what I want to cover. I think I did mention the RSI. I drew that line. So basically, you know, Nano, when it's below 30, when it's around 30 or below, it's oversold. When it's above 70, if it's 70 above, it's overbought. You know, clearly on the weekly, which the weekly is more important than the daily. It's a better sign of momentum shifts in the market. Currently, we're at 46, and in a bull market, we held 51 as support. So we're not even there yet, to give you an idea of how far, you know, things really could go. We're not even at the support for the bull market on the weekly RSI. I haven't even looked at the daily RSI recently because I don't typically look at it. It's hard to compare it to because it's hard to get all of this in one graph here. Okay, so the daily RSI, you can see that it doesn't nearly mean as much because, I mean, here we came up to 70, we popped back down, we came back up, and this was all during this massive run up here. And you can see that we have recently come back up, which is a good thing. I mean, we need to come back up if we're going to ever hope to start to see these larger price increases again. But what we're going to want to see, what we're likely going to see, I imagine, is we're going to come up and oscillate back and forth and slowly build up momentum over a long period of time. I mean, you can see that on the daily here, we hit it several times. We went above 70 several times. We even came back all the way down to 40 here, but we quickly recovered and then had this massive upsurge. So don't be scared about small changes in the daily RSI. You know, it's possible we come down. We're not really that concerned about daily stuff. Just keep your eyes on the longer term picture, and I hope this video has been useful for you guys. Remember, please subscribe if you guys like this content and like it, and also just if you like the calculus part, let me know. If you don't like it, you're not going to offend me. I'd rather know you guys don't like it than continue to cover it if it's boring. All right, I think that's it. Until next time, guys. Bye.